All right, welcome back. Is all this market turmoil and tariff talk turning Americans into savers? Now, Americans are tapping the brakes on spending, that's for sure, pulling back on dining out, hotel stays, and other expenses as they boost their savings ahead of new tariffs and continued economic uncertainty. Now, consumer spending inched up 0.1% in February, while the personal savings rate rose to 4.6%. All of this, well, the University of Michigan's sentiment surveys show that Americans' view on the economy fell for a third straight month to the lowest level since 2022. But that wasn't really that long ago, was it? Consumers are increasingly more reluctant about spending, said Linda Basur, a senior economist at EY Parthenon. She said that there are clear signs that the consumer is being more careful. Now, we wanted to see what our next guest had to say about this. Please welcome to the show, Rebecca Walser, Walser Wealth Management. Rebecca, thanks for coming on. I guess I'll throw this at you. I feel like I've seen the death of the consumers, about 5 times in the last 4 years. Is that the case this time, or is this another just flash in the pan?
What I'm actually realizing, Scott, is how much the media controls consumer sentiment, right? Because they were really successful during 2021 when Yellen was out there calling inflation transitory for over, I wouldn't say close to 18 months, really. And they were really successful in that because we were definitely experiencing inflation. We were experiencing the beginning of a recessionary marks, with the traction, all those things. And they were able to label it in mainstream media transitory, and the American public discounted it. What I think is happening is we've got to remember, we got to step back and realize Trump has only been in office for approximately 70 days. And so he is leveraging, and I've said this before on your show, and I'll say it again, he is leveraging the tools in the toolbox that he thinks he has the cards and who holds the cards to get what he wants as a means to an end. That by definition creates disruption, and by definition the markets don't like disruption, they don't like volatility, so they're going to be volatile. But I've said to everyone, 6 months from now we have to be at a point of some level of stabilization. So in other words, the mergers and acquisitions and all of those things that have fallen off, Scott, that we expected to be massive, like its best year in 22 years, something like that, all of that is because businesses cannot quantify the cost of what is happening because it's so volatile. Trump will say, I'm going to tariff you, I'll take it off, or I'm going to do this, or I'm not going to do it. So this is the machinations back and forth, the tit for tat that's going to happen until it stabilizes. And once it stabilizes, I promise you, we had tariffs in the first Trump 1.0 administration. And once the policy stabilizes and people can quantify, and specifically businesses can quantify costs, then businesses will continue on as usual. I'm not saying that our economic activity will be hyper or hypo. I'm not saying that. I don't know exactly how the impact is going to come, but I know that once it's stabilized, then we can stop getting these headlines, which are scaring consumers. Now, I'm not saying, Scott, that we're not in a recessionary time. I feel we've been in a recessionary time, and they basically changed the definition to not call a spade a spade. Right. So, yes, are we experiencing a recession? Probably, but let's be honest. When you print $10 trillion over 3 years after 2020 to not go into a depression when you voluntarily shut down the economy of the world, then what do you think is going to happen? In other words, if you want a tissue and a Kleenex for me and me to give you a hug and tell you everything is okay and it's the romper room, that's not who I am. I am going to tell you the truth. I'm going to tell you to buck it up. Pick yourself up by your bootstraps and let's go. We have been too much of a printing economy trying to keep the pain away of what our real policies, our economic policies have caused us, and we can't do it. We have printed and we have printed and we have printed. And if you really want to know when this all switched, it was under Obama when the Federal Reserve changed to modern monetary theory. And when we decided that we would never feel the pain again of a stock market crash or a stock market correction, that is when we got into this MMT, and the reckoning will come. So I don't do anybody any favors by sitting here and telling you it's all rainbows and unicorns, because that's not the reality of the situation in the United States of America, period.
You've read my mind, and the reason why you did is because there are some folks out there, just like what you're saying, that are trying to say that, the tariffs is the excuse for the market. You look at 08, 09, you look at a S&P chart going back to 1970, and you can see it go from the lower left to the upper right very slowly, 8 to 10, 12% a year. And then in 08, 09, when Bernanke or this MMT came around, modern monetary theory, where they thought they could spend until their heads caved in. And that market went straight up from there, basically, when that's where they talk about the Fed put and Bernanke and the likes. Well, and you have to get back to reality. You have to get back to some sense of normal. And I don't know if Trump's actually said it in those words, but us in the money business know that this is not. Tariffs could be the excuse for the market selling off of, because we've got so much bloat from all the government spending to try to keep us out of that stupid recession in the first place, when everybody felt it last year. And I think they voted that way because you can change the meaning of a word, but you can't change the way people feel.
Yeah. And Scott, I think that I guess I just didn't realize when I got into this business that a lot of it is about putting lipstick on a pig. I mean, it truly is.
Yes.
And the mainstream media is the biggest contributor of that. And my little voice, as much as I can, your show, as much as we can to get the truth out. You cannot hyperinflate your currency for decades and then expect there to be a pain-free environment. It's just fake. It's like taking, a fake drug to be skinny and then, starting to eat ice cream again and wondering why you balloon up. Like I just don't know how else to explain to the American people. We have brought this upon ourselves. And so I think it's great that Americans are saving more and preparing for a rainy day, because a rainy day is coming, and that's the truth of it.
And they might just get lucky enough to have AI lessen the blow. I'm not saying it's not going to stop the blow, but we might have some decent productivity from artificial intelligence that makes that corrective period not as bad as it could have been if we hadn't had something as game-changing as artificial intelligence.
This is the fourth industrial revolution. AI is here to stay. It's a long runway. It's going to take time. But yeah, everything is changing about all human capital and jobs in the next 20 years. It's definitely.
Awesome to have you on. Thank you very much. You're great. Everybody loves you. Thank you very much for being on the show. Rebecca Walser, Walser Wealth Management, down in Tampa, Florida. We'll see you again next week. All right.